Mortgage rates are on the rise. There's no denying that. You've heard it. The press is all over it. They're touting all the noise about the high rates, the highest we've seen in 20 years. And you know what? That's all reality. But guess what? Rates right now are still trending up. So now it may feel to be a bit of a gut punch if you're in the process right now of trying to buy a house. But you know what? The reality is, if you need to buy a house, you need to buy a house. And so how's this impact you? Well, with the higher interest rates, that's going to impact your affordability. That means the amount of home you're wanting to buy may not dovetail with what your thoughts are as far as a mortgage payment. How can we counter that? Well, perhaps you can find a way to reduce some debt. Perhaps you can find a cosigner. There are different things you can consider, or you may need to consider buying a little less of a house just to get the acquisition of a home under your belt. Higher rates equals higher payment equals less affordability. There's no denying that. Now, there was a report that came out by the Urban Institute that basically explained that when rates go up, monthly housing payments, of course, increase. For potential home buyers, increased monthly payments can reduce the share of affordable homes out there. Additionally, with the higher rates, that means fewer homes are going to be on the market because existing homeowners have an incentive to hold on to their nice low rate they've got right now. So some people are trying to decide, do I make the move now? Do I buy, do I sell, or do I just kind of sit on the sidelines? And if you're thinking about sitting on the sidelines, is that a good strategy? Well, the question really goes, where will rates go from here? So if you're eager for rates to drop, you're not alone. Everybody is. Everybody would love the rates to be a little bit lower, but no one really knows when that is going to happen. So let's unpack that a little bit. So forecasts project that rates are going to fall in the coming months. Well, we've heard that for the last couple of months, and we've heard that the last couple of months. We've heard that the last couple of months, and guess what? They keep going up and up and up. So the data is suggesting that rates should be going down, but the experts are saying that they don't know when it's going to happen, right? So there's a disconnect. So basically right now, the best advice for your home, for your move, is this: don't try to control what you can't control. So the reality is there are certain things in your power that you can control. This includes trying to time the market or guessing what the future holds with mortgage rates. CBS put something out there along the lines of, if you're in the market for a new home, experts typically recommend focusing your search on the right home purchase, not the interest rate environment. If you need to buy, you need to buy. So instead of worrying about what you can't control, you need to be worrying about getting connected with the right real estate professionals, the right mortgage professionals that can give you sage advice and offer you maybe a detailed strategy for what the best steps are. If you've got things changing in your life, you're having a family, unfortunately maybe you're getting a divorce or some kind of life change happening, things are not going to wait. You need to make the move. You got to make the move. So the bottom line is, the best advice for your move is, don't try to control the market because you can't. Don't try to control the rates because you can't. Even if the experts say it's where rates are going to go from here, they really don't know. You should instead focus on what is happening and what you can in fact control, and that's finding the right professionals to represent you. So hope that all makes sense to you. Any questions at all, mortgage-wise or real estate-wise, don't hesitate in reaching out. You can always find me at davidwakefield.com or give me a shout at 904-237-1450. Bye for now.